And for more on the markets, I do want to bring in our next guest. That's Adam Turnquist. He's a chief technical strategist at LPL Financial. Adam, certainly markets responding to every headline that we get on trade, but it seems as if traders are buying the dip today. What can you tell us?
Hey, good morning. Thanks for having me on. Great to be here with some green on the screen. Finally, we're seeing a nice open here for equity markets. The big question, have the lows been set in this equity market? And of course, we look at things technically. When you look at the absolute price action, we were completely washed out near some pretty key support yesterday, intraday, getting close to this kind of 50% retracement level of the bull market run. Momentum very oversold by historic proportions when we look at some of the indicators that we follow. Breadth completely washed out. So when you're trying to find a market bottom, oftentimes it is more art than science. And when we go through our checklist, a lot of items have been checked off. So I think we can call it potentially close enough here for a potential low in the S&P 500.
Interesting. Potential low, of course, trade. Potential recession, stagflation, inflation, Fed cuts. There are so many factors, right, Adam, that are still out there as well. How do those bake into your thesis and what you see in the charts?
Well, we're trying to assess what's been priced into the market. We've had this massive drop really from the February highs, been on a downhill ride into this bear market territory. We've seen earnings come down modestly. We think there's some potential room to go there. Of course, economic revisions coming down, and maybe we're pricing in kind of a worst case scenario when you think about the tariff backdrop right now. We're moving from the tariff headline rate, of course, a little bit of sticker shock last week, to say the least, from those tariff rates, but now we're moving from the tariff talk to negotiation. We're seeing evidence of that this morning on this positive open, and then the narrative will likely change more toward tax bills and getting something through Congress. We think those are potential catalysts that keep a rally moving higher and potentially a backstop from going into a bear market.
Interesting. Now, I do want to ask about particular charts, even beyond equities, Adam, that are standing out to you in this environment. What are they?
Right now, the 10-year Treasury yield, it's not just equities that are all over the place. 10-year was on a wild ride yesterday. We were down from 380s to up above 420 this morning. It looked like a breakdown from a technical top formation. Of course, a little bit of whipsawing there. We had, I think, part of that rebound yesterday and yields moving higher due to short covering. There's a lot of long positions in equities, long Treasury, so some profit taking there. And then, of course, I think we maybe overshot the recession odds and maybe growth coming back into the 10-year as well. Other charts that we're looking at that are really interesting, crude oil breaking down from a major base. That's a little bit more of a recession signal that really does speak to the risk right now in this equity market. By no means are we in the economic all clear, but I do think a lot of the damage has been done here. We've repriced a lot of that growth. When you look at, for example, the multiples on the S&P 500 dropping down to about 18 times forward earnings. That's in line with the 10-year average. Same thing on the tech sector. That's another chart I'll be watching very closely. Completely washed out, extremely oversold. And I think if we're going to get a rally here, at least a sustainable one, you're going to need to see tech at least participate, if not lead off these lows.
So I think beyond, of course, the headlines that we'll get on a real-time basis when it comes to trade, the next major factor that we could see move the markets, Adam, is earnings season, right? Of course, the results will be backward-looking, but guidance always is the major mover when it comes to markets and individual stocks going forward. Any expectations when it comes to this earnings season and how that could factor into the charts?
When it comes to guidance, you're absolutely right. That's really what's going to matter the most. And I think kitchen sinks will probably fly here when we look at corporate America trying to forecast what they're going to do for the rest of the year, if not next year. Really going to need some clarity from the tariffs. And I think until we get some of that, it's likely going to have some uncertainty in corporate America. We've already heard a lot of that in terms of corporate and CEO confidence measures that we look at. So I do think some of that is expected. Just to what degree in terms of that guidance. When you look at earnings revisions lower, we do think there's some room for downward revisions, just given some of that sentiment. And again, I think some of that has been priced into this market.
I do want to ask, it is President Trump's second term in office, so the stakes are different, of course, than his first term. first term does require another re-election campaign, at least as it is now. And we had seen tariffs be a pillar of his first administration, but certainly more aggressive, it seems, at least out of the gate here in the second administration. What have the charts historically told us about the impact on equities and other asset classes when it comes to these levies and the implementation from the White House?
So on the technicals here, it just leads to uncertainty, and you can see that in the charts, whether it's a policy uncertainty index. We saw that in the Trump 1.0 index, Trump 1.0 version with some of the policy uncertainty indices hitting historically high levels. We have obviously witnessed that in the first quarter here. And technically, we look at revisions to those policy uncertainty indexes. They're not necessarily trending type of indices. It's more of behavioral finance, and you see mean reversion in a lot of that. That's what we witnessed in the VIX. Of course, when you have uncertainty, you have fear. That shows up in the VIX. We had a 60 handle on the VIX Sunday night, early Monday morning, we'll call it, on the VIX. And typically, when you have peak policy uncertainty, peak fear in the market, you're pretty close to a market low.
Adam Turnquist, Chief Technical Strategist at LPL Financial, thank you so much for joining.
Thanks for having me.